Hi everybody, this is Osprey from MyChartCoach.com, and I'm gonna take a look here at the FANG stocks in this video. So we're gonna take a look at Facebook, Amazon, Apple, Netflix, and Google. And so yeah, so with the computer algorithmic trading programs, the charts all look very similar. And so yeah, today with the big drop down, there were monster percentage gains for the puts. Some were up 5,000% on the day. So congrats everybody that was able to play that to the downside. Now it looks like they're setting up for the bounce. If you look here, you have with Facebook, RSI now is below 50. You have Fasto down here below 20, and so the last time that it has broken below 20, it tends to bounce off of that level. So we'll see if that can continue. Notice that the previous drops below were the start of a bounce, and so same thing here. Also, the share price today, it did break below the middle Bollinger Band, so there is the threat of a new downtrend starting. So the next key support level was hit, which was the 50-day simple moving average, currently at 175, 175.15, the green line right here. And so it bounced off of the zone. It closed right at that level. That is the key level to hold tomorrow. Notice it's lined up with the lower Bollinger Band here at 176, basically. And so this is the crucial level to hold. Notice how it's lined up with this ascending support line. So this is a multi-month support level. If it breaks below, then the next big support level is going to be this 100-day simple moving average right here at 171, and then you have support here at 170. If that breaks, then you could see a big test down here in the 160s, and then you have the 200-day simple moving average is way down here at 158. So this is the crucial level to hold. The share price, is hitting the bottom of the channel. This is where it's likely to bounce. There was a big volume spike into the close. Notice the lower wick on today's candle, very similar to the last time it bounced. The red flags, though, are the bear crosses on MACD. So the MACD line is going to need to get back above the signal line. If you look here at the 15-minute chart, what you're going to see is a big volume spike at the close. So the last volume bar of the day, it closed on a volume spike. So this looks like loading into the close with 2.7 million shares trading in the last 15 minutes. Notice how there was a declining volume pattern, and then that led into the volume spike. So there were sellers, people. It looks like there were buyers down here loading off of the bottom, and then it held support. And it formed essentially a double bottom here in the morning. Went up, hit the middle Bollinger Band, failed to break the dotted purple line here. This is the crucial level to break tomorrow, which is at 175.37. It formed essentially a double bottom here, and then it came back up, and it's hitting this. Look how many candles hit the dotted purple line. Once it breaks above that level, that's going to be the signal that, okay, it's heating up, it's back in play, and then we're going to be looking for a break above the upper Bollinger Band at 176. And so notice how that's lining up with the high close resistance level. So you've got the closing price here at 115 and then the 176. If you can get above those levels, then you have the moving averages up here. You could see a run up to the 50 simple moving average at 179. So keep in mind, when the Bollinger Bands were tight, it was signaling a move was imminent. And once the middle Bollinger Band right here on this candle here broke, the middle Bollinger Band turned into resistance, and then you had the break below the 50 simple moving average. That was signaling downside risk. That signaled the bears were in control. So this was the signal to exit if you were long. If you were still holding and it came down and it tested this 100 simple moving average, this was really the big signal to get out. That's why we always say, you never want to hold if the candles, if you never want to be long if the candles break below the middle Bollinger Band and the 50 simple moving average on the 15-minute chart. And as you can see here, we cover a lot of small caps and over-the-counter stocks and just all sorts of different types of plays. And the analysis holds true even with the big large caps like Facebook. So yeah, and then the break below the 300 simple moving average, that was a big red flag. That was signaling more downside risk. Right now, the chart is super bearish. It has to get back above these moving averages to get a new uptrend going. So if they remain resistance, that's going to signal more downside risk. So let's take a look at AMZN here, Amazon. So yeah, it cooled down as well. Notice how RSI and Fasto both dropped below the power zone. Notice how RSI was above 70, Fasto was above 80. They dropped below. That's a big signal the chart has cooled down. The share price, and then you also have a bearish crossover on ADX with plus DI, the green line crossing the black line, ADX to the downside. And so notice how this gap filled. There's a gap between high of day on this candle and low of day on this candle, and the share price came down and broke EMAs 4 and 8 and bounced off of EMA 13 down here. As long as the middle Bollinger Band down here at 1137 holds, that's the dotted purple line, this uptrend is intact. Okay, so the uptrend should continue. If it closes below that, that's when you could see the big consolidation, the possible downside risk, and it could work its way down to the lower Bollinger Band, and you have the 50-day simple moving average way down here at 1048. So the red flag is, you notice once the candles were running again above EMA 4, they were holding EMAs 4 and 8 support the entire time until today. Okay, so this is the first close below. It closed slightly below on this candle on the 20th, but this is a sharp pullback. And so it needs to get back above the EMA 8 at basically at 1164, to keep this strong, bullish strength going. If it turns into resistance 1164, then you're going to most likely see the middle Bollinger Band down at 1137 tested. Notice there was also the big volume spike into the close. There was a PSAR bear flip today. Notice how the green dots were below the candles and they flipped above. The parabolic SAR stands for stop and reverse, so it's signaling that the uptrend is possibly stopping and a new downtrend. It could be starting. It could easily, the dots are very close, and once that 1213 level, if it was to get hit, the dots would flip below. Now the big thing, that middle Bollinger Band, if it breaks, it's going to signal downside risk. MACD crossing over here would be a red flag. Notice how you're already starting to see a bearish crossover on the 8, 13, and 5. Now notice how this chart is really similar to the Facebook chart. This is the 15-minute chart for Amazon, and this had the super tight Bollinger Bands. So this was telling you a move was imminent. And when you saw the break here on this candle below the middle Bollinger Band and the green line, that 50 simple moving average, that signaled to get out. It was a clear signal right here. You had plenty of time on these candles. There was a couple hours where it was signaling at when 1195 turned into resistance that, like, okay, this chart is not, it's starting to break down. And if you waited till the next day, that first candle, you could see, everybody decided to sell at the same time, and the candle started writing EMA 4 fast. The 100 simple moving average broke. It came down. It hit the 200 simple moving average. It tried to bounce off, and it failed to break. And so the strategy is when you get the break below the 50, 100, and 200 simple moving averages, you look for a reload off the 300. Many times that's the technical bounce level, and that's exactly what happened here. When you get the technical bounce, what you're looking for is a retrace back to the middle Bollinger Band, and that's usually the top of the bounce. It's between the 300 and the middle Bollinger Band. That's really a good intraday trade, so take note of that. And so now the big thing is getting above that middle Bollinger Band. It's currently at 1157. So if that level can turn into support and it can stay above this 200 simple moving average, then it could work its way up here to the next target, which is 1177 and 1182. Notice you have the big volume spike into the close. For the stop loss here for the level, if it drops below 1150, that's going to be a big red flag that the chart's broken and downside risk. It really needs to stay above 1160 to be bullish. It's trying to bounce here. It's trying to set up. It had the volume spike. You can see where bounce players have loaded. There's the bullish crossover on MACD on both time frames. Okay, let's take a look at Apple. So Apple today actually broke the middle Bollinger Band. You never like to see that. That's never a good sign. It came down. It's testing the 50 on RSI. It really, you want to see it bounce off of 50. Check out, okay, over here, if you look where 50 broke down and it got below, that was when there was a downtrend. And so notice that back here, you know, when this candle dropped below the middle Bollinger Band back in the first week of September, that was a red flag. It got back above, and then once it got back below, that's when it had the big pullback. And so you don't want to see that repeat here. You really want to see the candles get back above the middle Bollinger Band, currently at 172. That's the big level. If 172 remains resistance, you know, it needs to hold this 160, basically 167 level. That's the lower Bollinger Band. If that breaks, you're going to see a drop down here to this 162.52. That's the 50-day simple moving average. That's the big support level below. You know, if it fails to hold that lower Bollinger Band, you know, you're going to see that 50-day simple moving average tested. It'd be best for the bulls if it got back above that 172 level. And then what it needs to do is break this double top level. It came up and it formed a double top. And so whenever you see a double top after a big push, you need to you know, be careful. This was the red flag. It came up, and then you always want to draw your horizontal resistance line. It failed to break that level. It failed to even close at that high. It closed below that level. That was a red flag. You know, it hit the high close was 175.50, and then it came up and it hit 175. So it failed to make a higher high. That was a red flag. It was cooling down. So there were red flags in the chart. The double top, it pulled back. You know, you do have the volume spike here. So now if we look at the next chart, you can see it looks like people loaded once again. Okay, so we're not sure. You know, you will have to see if it's going to follow through. You know, there was a big volume spike at the end here on the 27th. And it continued to drop. So you know, that could be a number of things. It could be shorts covering. We'll have to see what happens if it's all about the middle Bollinger Band on these charts. They all have the same setup. You know, they came down, they broke all the moving averages. So you know, the 50, the 100, the 200, the 300, they all broke. Once they broke below the final support, the 200 and the 300 simple moving averages, the red and blue line, that's when they really started dropping fast. So it's always a risk, you know, when stocks get below the 300 simple moving average on the 15-minute chart when they've been trading above. So keep that in mind. And so now it's bouncing. If it can hold that middle Bollinger Band at 168.80, that's going to signal that it's in play. The next target is 171. It's not officially you know, turning bullish again until candles are forming both above the middle Bollinger Band and the 50 simple moving average on the 15-minute chart. Getting above the middle Bollinger Band is signaling that it's heating up, but it has to get back above that 50 simple moving average, and then it'll have to break the other moving averages above. Okay, so if you look here at Netflix, you know, it's really cooled down big time. It had the big drop below 50 on RSI and Fasto. You know, now you have Fasto getting ready to hit 20. You know, historically, you know, it gets a little technical bounce off of that level. It's been hitting the 50-day simple moving average here, and that level had been holding. Yeah, you can see here where the candles have been coming down. Hit, you know, right each time that level's been hit, you know, they've been holding. And so what happened today, there was a close below. Yeah, so this chart, yeah, so maybe I'll just pull that back. So what happened today, the close below that 50-day simple moving average, that is a red flag. Okay, so you do not want to see that level turn into resistance. The prior test, you know, support test, it held. So this is a bearish change in trend to close below. This could be a sign, a red flag. If 193, the 50-day simple moving average, turns into resistance, that's going to signal downside risk. It has to get back above that level. It also has to get back above the middle Bollinger Band at 195. If it fails to get above both levels, then you're looking at 184. That's the next support level, the 100-day simple moving average. So yeah, if it breaks below 184, it could really get moving to the downside. You know, you're going to have a support down here, you know, at around 177.50. Yeah, but you know, if that breaks, you know, the 200-day simple moving average is on deck. So yeah, so this is a big breakdown here. You know, it needs to get back above. You know, this had a sideways channel, and then it broke to the downside, and so this could be signaling this possible start of a new downtrend. So it's going to be really important that it bounces quickly. You can see down here there was really heavy volume at the bottom. So the same thing, it got below the moving averages, and that was the big red flag on the first candle of the day breaking below the middle Bollinger Band and the 1500 simple moving average. Those signal downside risk. And then once the second candle of the day got below the 300, that was a real big red flag, and it just dropped super hard. So the bottom was found down around 185, 185.50, and it worked its way back to the middle Bollinger Band once again. So it needs to get above 188. If you can see the share price trading above that 188.19, so 188, 189, that would be a signal that it's in play. It has to get above the high close here, which is at 190.50. And that's lined up with the upper Bollinger Band. If it can get above that, then it might run back up and test those moving averages. So fail to get above that middle Bollinger Band, that's going to be a signal that more downside risk. So it's going to be really crucial tomorrow that the FANG stocks bounce. You have Google here with another breakdown below the middle Bollinger Band. It was able to bounce on prior breaks below. You can see here it closed below and it got back above. Down here when it tested the lower Bollinger Band, it bounced off each time. So is that going to happen again? Here it is. It broke below the middle Bollinger Band. It's hitting the lower Bollinger Band. There was an intraday bounce off of that, or it bounced end of day. It closed above the low of day, forming a lower wick, and so it has to get back above that middle Bollinger Band. So that's currently at 1047, and so if it can turn this 1047 level into support, 1047, 1048, then that could get would signal continuation of the uptrend. If you see 148 turn into resistance and it can't get above that level, that's going to signal the possible start of a new downtrend. And then if the 1028 lower Bollinger Band fails to hold, you'll be looking for a drop down to the 50-day simple moving average at 1010. Yeah, so this could have a lot more downside risk for these FANG stocks if the middle Bollinger Band turns into resistance on the daily chart. This is could be the start of a new downtrend. It has to bounce and get back above that level immediately, or else it's going to signal more downside risk. As you can see here, the breakdown yesterday below the 50-day or 50 simple moving average on the 15-minute chart signaled downside risk for Google. The first red flag was when the middle Bollinger Band broke down. And so, there was a very strong uptrend, and then the trend changed here, and it started heading down. Once the candles were writing EMA's 4 and 8 resistance lower, it was signaling downside risk, and it failed to bounce off the 100. It was a big red flag. Yes, there's going to be lower, reload levels lower. And so, yeah, it followed the other plays. It broke down below the 300 simple moving average, found support. It actually closed above the middle Bollinger Band down here at 1035. So if it can stay above 1035, it's in play. If it drops below 1035, that's going to signal downside risk. It has to get above 1039, that's the upper Bollinger Band, and then we're going to look for a retrace up here to 1047 and test that 300 simple moving average. A crucial level to break is going to be 1044. That's the closing price here at 1030 this morning. So yeah, so keep an eye on the FANG stocks. It looks like they could bounce. I mean, check out the big volume spike at the end of the day. It looks like people were, we're going to see. Were they loading in the day, or is this going to be a head fake, and there's a downtrend is going to continue? It's all going to be about trying to stay above the middle Bollinger Band or breaking the middle Bollinger Band on these 15-minute charts. If they turn into resistance or the candles stay below, that's going to be your easy clue. Okay, there's more downside risk. You still want to be short. If it starts reversing, that's when you want to start looking at those calls. Okay, thanks everybody for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at our new chat. You can go to mychartcoach.com to the chat link, and then go in there and send us a direct message, and we will get you all into that premium. Okay, thank you very much. Yeah, we've been discussing the options, and yeah, there's a lot of big winners out there. Okay, thanks.